The team from Next Gen EMP both ringing the bell. They will also be on the broadcast on this Friday afternoon. Volatility down, the 10-year Treasury yield up for a third consecutive session. Gold and silver benchmarks are up, as are the oil majors. The crypto majors are up as well. We'll talk a lot more about them. And the great Einstein of Wall Street will join us right after the bell for his take as we kick off a new year. Time now for the close here at the big board. And at least so far, as the company seeks to scale its electric delivery van fleet. Joining me now here on the trading floor of the big board is Wayne Penello. He is the CEO and co-CIO of Next Gen EMP, who just rang the closing bell to welcome in the brand new year. Happy New Year to you, and thanks for joining the show.
Thank you. Thrilled to be here. Thrilled to have the opportunity to bring in the new year.
Of course. And what was it like for you and the team? Amazing enthusiasm down here for the bell. What was it like to do the honors here at the big board?
It's I've been in the Wall Street business, if you will, started in commodities for 45 years, and to be honored by a prestigious exchange, the largest stock exchange in the world, and perhaps the most important financial institute on the planet. Opening day, it's a big one. It really means the world to me.
I'm a little biased. I like to call this place the Yankee Stadium of Finance. How could you not look at this place?
Yeah, I think it might even be better than that. Better track record.
Yeah, than the Yankees. Yeah, certainly.
You don't have as many bad years as the Yankees.
Yeah,
do.
no, you're not kidding. Risk is an asset. Tell me all about the book, Turning Commodity Price Uncertainty into a Strategic Advantage. What went into the book? What do you want readers to most take away?
The most important thing I want readers to understand is that as a floor trader and then as a professional manager of multi-billion-dollar accounts for energy companies, process is everything. So I patented a process that translated commodity price risk into budgetary terms, which allowed the management teams of those firms to assess how much risk they had and what they could afford to keep. Well, believe it or not, where I was just trying to help them not to lose money on their hedges, they generated over $13 billion in bottom line payments by managing the process. And so when I sold that business, I reached out into the equity world and realized in the equities, most people diversify risk away, but they don't actually manage it. And I sat down and came up with a new algorithm and started managing friends' accounts. And it just got to a point where I said, I'm going to launch this as an exchange-traded fund because I don't want to serve just wealthy people. I want all investors to have access to a product that is an institutional quality investment program. It's a long-short program that typically, if it wasn't in an ETF wrapper, you couldn't hold that in your IRA or 401k plan, but in an ETF wrapper, you can. And so it has half the risk of the S&P 500, but last year, we matched it. And so standing here a year ago, if you had asked me the question, what's going to happen in 2025, who would have expected the market's going to drop 20% between then and April, and then rally 40% to close the year up 16? Yeah. With a hedge program, we dropped 7%. Because of the hedges, we didn't rally as much, but we still finished the year up 16%. Wow. So it takes all the volatility out of it. And I'm hoping that we help a lot of people by offering this to every investor, because we're only trading at $29 a share. So if you're only saving $30, $50 a month, you can participate.
Yeah, of course. I'm just about out of time. I got less than 30 seconds. What is something all investors should be doing more consistently for the new year?
What they should be doing more consistently is having broad market exposure and not trying to pick winners. It's very hard to time the market. It's impossible. Take last year's example. Who would have expected that? But I would recommend that whatever your risk tolerance is, 30, 50, 70% equities, keep some cash. And if you ever get a dip like the one we had in the first quarter, then you plow in a little extra money.
That's why we
always be disciplined.
That's why we always say it's time in the market, not timing.
Exactly. That's a great way to put it.
Thank you, JD. Before. Wayne Penello, CEO and co-CIO of Next Gen EMP. Congratulations on doing the honors to kick off a new year. Happy New Year.
I really appreciate you taking the time to meet me.
Great to have you. The book is called Risk is an Asset. Don't go anywhere. Much more Taking Stock coming up right after this.